Okay. So I think the next we're gonna look at the swing trading models on these stocks. And before we go into that, let's actually bring in kind of the presentation of the model. So essentially what the swing trading model does, and this is what you see, is really like an integration of our volatility models, and it also adds a directional bias. So we are basically looking to forecast the upper and lower level within the next 5 days or within the next 20 days. So we have two time frame, 5 days and 20 days. And really essentially it's gonna aim to predict not only the bands, but also the kind of like trend direction, so the bias. So here what we have is we have our 5 days, our 20 days. Let me make it bigger for you guys. And the model is divided into three main levels, but you're only going to see at any given time two levels in the chart. So in this slide, we see that we have an upper band. So the upper band will represent the upper price level that the model predicts for the next 5 or 20 days. And really, it helps you understand like resistance areas or upper limits where the price could kind of retrace. So that's the goal of that level. And then you have the lower band, which is the same idea, which is the lowest price forecasted by the model within a specified time horizon, which is really 5 days or 20 days. So it's a good indication of a potential support level or potential kind of like a reversal point if the price goes towards that level. And then you have a risk trigger, which is really the white dotted line. And really what this does, it helps you be alerted of potential volatility levels. So if the price typically breaches this level, could be like a strong momentum to the upside or downside. So it's really like a level that you want to pay attention to. And then finally, we have our backtesting results, and we're going to show you some details here, right here. So let me go back to our chart. So if we go back to our bot and we start looking at our swing level, 5 days for JP Morgan, this is what we see. So here we have our lower band 205 and our risk trigger 221. Here we see obviously a green lower band. So whenever a lower band is present, the model is on a bullish bias. And that again doesn't mean the price from today is going to go up or is going to go down. But by looking at the different data coming from the option market and all the momentum models that we have, like this is what the model is forecasting. So here at the top, you see like our backtesting results. So here you see the swing model success rate, which represents 81% on 37 days. 37 days would be the period from August 19 to today. So those are the 37 trading days. And here you see the lower band that was sent 5 days before and how it reflected with the closing price. So in this case, this would be the lower band that was sent on this date, and this was the closing price on this date. So for us, this classifies as a success. The success is measured if the price 5 days in the future is above the lower band or is below the upper band, and so on. So in this case, the price went up, the lower band was down here. You would have had this data 5 days prior, so that classifies as success rate. So in this case, over the last 37 days, the lower band was successful on 80% of the cases. And one time we had an upper band, and that was successful in 100%, which was right here. If we look at the 20 days, we can do the same. And right here, we have our lower band at 20 days at 196.69 and our risk trigger at 230.15. So if we look at the backtesting over the past, in this case, obviously 22 days, because we're going 20 days in the future, it's 95%.